it may have been a mistake to have this after lunch because I see people's eyes glazing over now. You're ready for a nap and you're like, oh, I don't want to pay taxes. This is too hard. But we're happy that we're going so well. Our next speaker is Fernando Torres with Books and Taxes. He's going to be talking to us about gamifying the C-Corp. So it's all yours, Torres.
So how many of you heard that tune or actually played that game? A lot of you, okay. So one of my favorite games was from the N64, was it Legends of Zelda? And so at the time, cutting graphics, cutting gameplay. But what did I do to be able to beat that game? I had a game book. It helped me go from A all the way to Z. So did it ruin the experience? No, because I enjoyed the process of playing the game and actually beating it. There's a psychology to that. And so if you're not into video games, maybe you're into football. So there's no audio. This is my favorite right here. Coming up. Watch. Boom. So this was a defensive player who was able to get through the line. Who did he have? A defensive coordinator to set up that play. So they had a game plan for every single play for, was it 15 minutes? College, I think it's 12 minutes each quarter. And then you had the offensive coordinator. The offensive coordinator did a horrible job for that play. Whose fault was it? The head coach, the offensive coordinator? Maybe a little bit of both. Maybe the players, he forgot to take the block. Or maybe it was a blitz. Who knows? But you get coached to be able to handle most situations. And so the great thing about that one player that got thrown into the opposing player was that he listened to his coaches. Continue running down the field because you never know when you're going to help your teammate. And he was able to help his teammate by getting thrown into another player, and that player got into the end zone to score a touchdown. So as a CPA, we're the head coach, we're the offensive coordinator, we're the defensive coordinator. As an offensive coordinator, we try to be as aggressive as possible, but of course we have the tax laws. There's gray areas which we try to put our feet in. And as a defensive coordinator, we're there for your audits because we're the ones who provided you with that education and you're signing off on a return. So you need to understand what the game plan is. So one thing that as a video gamer or as a football player, the head coach is there for the longevity of the season. As a CPA, we're trying to help you for tax season, for retirement, whether it's 5 years from now, 20 years from now. So the head coach is trying to get you to win that championship. So a lot of us are short-term thinkers, and that's gonna ruin the possibility of your tax strategy. So one reason why I chose the C-Corp is because I wanted that long-term game plan. So with the C-Corp, you can easily transfer the shares because if you have an LLC, taxes an S-Corp, what happens to the LLC when they're not technically shares because the LLC is based on ownership. So you can make it very complex with the LLC, taxes an S-Corp. So with the C-Corp, my game plan was maybe to give an inheritance to my children, maybe have them work as employees, maybe big enough to where there's multiple departments in the business where maybe they like marketing, maybe they like law. And so for taxes, we need all that. For a business owner, you need all those facets for a business. Or maybe later on, I become a publicly traded company, and I'll talk to you guys a little bit more about that in a little bit. So I wanted to share my history about why I chose the C-Corp. So another reason was I admired corporations. So I grew up, working for Walmart, working for McDonald's, and there were great corporations. You can start from the bottom and work your way up. So that was kind of my mentality. Is okay, let me start. I was at Walmart as a cashier, and my hope was actually to be a store manager. They got great bonuses, they got a great annual salary, and maybe move up to regional director, maybe national director, whatever it was. That was my game plan. I just happened to get into being an accountant, and so being a CPA, there's pros and cons to being a CPA with a big audit firm, a lot of hours, no matter where you go. But when I started my corporation in 2012, I really didn't know what I wanted to do. Yes, I was a CPA, but did I really want to be a CPA full-time for the rest of my career? And so I wanted to do maybe retail or something, because that's what I was used to. That's what you see these major corporations like Amazon, great companies. And so in 2014, I decided to start my own accounting company. Technically not an accounting company, because when you're an accounting company like Wesley, you have some more insurance premiums to pay, and you have reviews that have to be done by other CPAs. So I wanted to reduce my liabilities and my costs. And so I decided to be a tax preparation company. I'm still a CPA, but I can't provide certain services that Wesley can provide. And when I started my business in 2014, like all of you, I started with zero revenue. My first year, I made $25,000. But I knew I wanted to pay myself payroll. So going with what Wesley was saying is reasonable compensation. So I was the only full-time employee. I was doing most of the work, and because you're a CPA, everything is service-based, so there's really no cost to being a CPA. Maybe an office, but I didn't have an office. Overhead, like QuickBooks, whatever it was, is very limited as a service provider. So basically that $25,000 basically went to me. But the reason why I wanted to pay myself that and not be an S-Corp and an LLC is because I was previously a home owner. And so I knew that having a W-2 income was the best route to go to buy my next home. So back in 2013, I did purchase a home out in Pompano Beach, and I knew that wasn't my forever home. It was a small 2-2, and I had a growing family. I just got married that year. When I started my business, my wife was pregnant, so going from having insurance to being basically self-employed was kind of a hard decision. She had to go on Medicaid, and so thank you for government assistance sometimes. But I had this long-term game plan. So it wasn't until end of 2018 where my mother-in-law got sick, and she moved in with us in a small 2-2 with 2 young kids. And so that's one reason why we came out to Naples, because you can afford a little bit more home, and it was quieter, not as crazy as Fort Lauderdale, Miami, because I did that life for 15 plus years, because I went to University of Miami. And so my strategy was to increase my salary from 2014 to whenever it was that I was going to purchase my home. So in 2018, my salary got up to $52,000. I believe my income that year, that was my best year then, I believe I got to the $10K per month, so I reached about $125 in business revenue. But I paid myself $52. But here are the other great things that the C-Corp allows you to do. And they're available to all of you. The tax code, maybe 100,000 pages long if you print it out, but there's a publication called Publication 15B that gives you a little game plan of what is allowed for a C corporation. So the reason why I chose a C corporation is because as a owner and employee, I can deduct more things without having to be a pass-through. So I know Wesley had to say a lot, and there's so much that he can only say in 20, 30 minutes, but there are certain expenses that become taxable income to the employee. And so one of the ones that I took advantage of was the Qualified Small Employer Reimbursement Arrangement Plan. It's a mouthful, but it allows the corporation to reimburse its employees up to $5,200 per individual on any medical expenses, out-of-pocket medical expenses. And if you have a family, it goes up to a little bit over $10,000. So who wants to use pre-tax income to pay for your medical expenses? That's what I did. So some of you may have heard of an HSA, Health Savings Plan arrangement. It's kind of the same thing. You use pre-tax dollars to pay for your medical expenses. But when you're your own business, you find the loopholes, and that was one of them. Another one was when we moved over to Naples, my wife decided to start a full-time job as a teacher. This was fall of 2019. And so we just purchased our home in Naples, and I qualified. We used the proceeds from the sale of the Pompano Beach to pay off all my debt and use a down payment, and we still had some leftovers to buy furniture and whatnot. So in 2019, when my wife started working, I was like, hey, why do I need to pay myself $52,000 a year? Because we were living on $52,000 before she started working, and so adding her salary teacher salary at whatever it was, I think it's 47 for Governor DeSantis passed the legislation to increase salaries for teachers to 47 for first-time teachers. I was like, okay, we lived on 52. I think we can live on 47 plus some of the things that the business pays for. And so I took myself off payroll. So what happens to that payroll now that I haven't been paying? So my payroll taxes were about $1,000 per month. So $52,000 plus $1,000 per month. I was like, I can reinvest it in my business or find other loopholes. In the meantime, there were some loopholes that I was taking advantage of, was the dependent care reimbursement. And so that is $5,200 as well. So my wife started working full time, so legally we're allowed to use this dependent care because she is working. I'm technically working even though I'm not getting paid. There's exemptions when you're the shareholder employee of a corporation. So she started working. My daughter was in VPK 1. She got the voucher. My son was 3 at the time. And so we had to pay for him a little bit out of pocket. So that first 4 months, I used pre-tax dollars to pay for their daycare. So if you add the 10 from the medical reimbursement plus that 5, you're looking at $15,000 that you can not pay taxes on. So isn't that part of the game? Isn't it what we try to do is get the benefit from our business to pay for our personal lives? And that's what I was doing.
Amen.
Yes, awesome.
Another thing that's available to new businesses, or I'm sorry, to any business that wasn't available when I started my business was the business can now pay for your student loans up to, I think, $5,200 per year. I ended up graduating with $90,000 in student loans that I paid back. I wish I can go back and amend my tax returns and claim that extra $5,200, but I can't. But it's available to everyone here. So if you still have student loans, there's different ages here. Maybe you want to go back to school and have the business pay for it. There you go, another $5,000. And so now you're up to $20,000 of pre-tax income that you guys can benefit from. Some little footnotes with the qualified reimbursement plan. If the business is reimbursing you for your premiums, your medical premiums, you cannot take the premium tax credit, so be careful with that. You can't, if the business is paying for your children's daycare, you can't take advantage of that dependent care tax credit that's available. There's no double dipping. I've seen tax returns where people are super aggressive, and so I don't play those games because I'm giving you the game plan to do it right. One of the other things that I always wanted to offer in my business was a retirement plan. And so when I was working corporate right out of college, I was single. My first job, I was making $40,000. I believe I was putting in about 10% of my income into a retirement plan. I got a raise, and I put that raise into my retirement plan. So after 3 years before I decided to leave that job and do something else, I was able to get $30,000 into my retirement plan. That's a different strategy, but I'm gonna talk to you about how you can benefit with your own business and get that deductible. So short-term, long-term, this is where a lot of business owners and even the general population falter, is they don't save for retirement. But if there's an avenue for you to deduct revenue, have expenses deduct against your revenue, why not take advantage of it? And so one of them is the 401k plan. And so my goal was to, in 2020, was to start a retirement plan, but it did not happen. So 2021 passed, and sorry, Christina, I met this other young gentleman. Their company solely does 401ks, and he educated me. I educated him because I asked a ton of questions, because I didn't want to pay taxes. I didn't even want to go on payroll to do the employer match. So of course I'm leaving some money on the table, but I'll let you know how that's going to work, because eventually I'm going to get there. So how many of you want $1.2 million for retirement? I think most of you do. So my parents are living off Social Security. My parents have a funny situation. They've been on and off separated for so many years. But one thing that has caused them to live together again was the cost of living. So living off Social Security, my mom has disability, so that's even lower. My dad maybe takes in $1,400, my mom maybe $1,000. Can't live off of that. They have to be wise with their spending. But if you have $1.2 million and your Social Security, I think you can do fairly well. So where am I going with this? $1.2 million. So my game plan for 2022 is the profit sharing. So you can have a total of $60,000